Have you ever just stopped to think about the invisible forces that make your daily life possible? I mean, the system's humming quietly in the background, totally out of sight, making sure the gears of society actually keep turning. Well, today we're looking at one of the most powerful and honestly most misunderstood structures ever devised by humanity. We are looking inside the system to see how banks secretly power the entire economy. To start us off, picture this. You wake up tomorrow morning, you groggily open your banking app on your phone, and you're staring at this balance, $0.00. Now that zero doesn't represent a hack, it's not a bankruptcy, it actually represents the fundamental reality of the banking system. The money you thought was just sitting there, statically in your account, it was never actually there to begin with. Okay, let's dive into this, because it creates an immediate, almost dizzying paradox. If your deposited cash isn't just chilling in some giant vault waiting for you to use it, where exactly is it at this exact moment? If it's your money, how on earth is it not in your account? Well, here is the shocking truth. While you absolutely consider those funds yours to withdraw at any second, they are simultaneously outworking in the real world. Right now, your money is paying for someone else's new house. It's financing a local business expansion, or maybe helping a neighbor buy their first car. This massive global structure of double-duty capital is built entirely on one incredibly fragile asset, and that is trust. To really understand how this all evolved, we have to rewind the clock a bit. Look at this timeline. In the ancient past, wealth was super tangible. We're talking heavy gold and jewels. But tangible wealth was dangerous and honestly just a pain to store. So about 5,000 years ago, early civilizations created trusted institutions to keep records of ownership instead, which allowed trade to explode. Fast forward centuries later, and you've got merchants and money changers stepping up. Eventually, this evolved into the modern era where professional banking takes shape. And as this happened, a completely different invisible mechanism quietly took over. And this brilliantly illustrates the biggest myth in finance, the idea of the giant, impenetrable vault. The reality is actually far more biological. See, when you deposit money, your bank simply records your balance on a screen, while those actual physical funds are immediately sent back out to support lending across the economy. Banks are not static safes, not at all. They are the active, beating heart and circulatory system of the economy, constantly pumping resources to exactly where they're needed most. Let's break down exactly how this invisible engine works, step by step. 1. Depositors save their money. Every single morning, millions of people deposit cash, while others withdraw it, get their salaries, or pay their bills. 2. Banks lend those funds to borrowers. To manage this massive flow, banks rely heavily on mathematical patterns of how customers behave, keeping just enough liquidity on hand for daily needs and lending out the rest. 3. Borrowers use that money to build and grow. And 4. The engine sustains itself because banks profit on the interest differences, meaning the gap between what they earn on loans and what they pay out to you, the depositor. Meanwhile, central banks are playing referee with regulations to keep everything stable. It's this highly tuned mathematical machine connecting everyday transactions perfectly. Now, this remarkably effective mathematical system works perfectly, right up until human emotion takes over. You see, this whole engine, it requires absolute confidence to function. Because your money is out there circulating, the system literally only works if everyone doesn't ask for their money back at the exact same time. It works flawlessly until fear begins to infect it. And as history has shown us time and time again, fear spreads significantly faster than confidence. We don't even have to look back to the Great Depression to see what happens when that fear takes hold. Take March 9th, 2023, Silicon Valley Bank. The theoretical risks of this system became a very harsh reality. When news broke that the bank was urgently selling off investments at a loss just to raise capital, that news didn't take days to circulate. I mean, in the age of social media and mobile banking, it took minutes. Trust vanished overnight, and panicked customers rushed to withdraw their money all at once. The scale of what happened next is just staggering. Look at this number, $42 billion. Because customers were utterly terrified the bank didn't have enough liquid cash to cover their deposits, they initiated an absolute avalanche of withdrawals. In a single day, $42 billion was requested to be pulled out of Silicon Valley Bank. Actually, scratch that. No bank, no matter how well structured, holds that much idle liquid cash in reserve. It's impossible. The circulatory system was drained way faster than it could pump, creating a systemic failure so severe that regulators had to literally step in and shut the whole thing down.
This catastrophic event wasn't just some textbook lesson about one single financial institution mismanaging its bond portfolio. It revealed a much more profound lesson about the very nature of our reality. Banking is built on mathematics, but it survives on trust. I want you to really absorb that. The formulas, the algorithms, the regulations, they're completely mathematically sound. But when trust disappears, the math doesn't matter. Even a healthy-looking financial system will face enormous, crushing pressure if the people participating in it simply stop believing in it.
So the crucial point is, after seeing how unbelievably fragile this trust-based system can be, why do we even use it? Well, because without it, progress basically grinds to a halt. Imagine a world without banks. Families would have to save 100% of the cash required to buy a house, meaning they'd wait decades to own a home. Businesses would completely struggle to grow because they wouldn't have the upfront capital to hire new people or build factories. Students simply couldn't afford higher education. Banks take static savings from those who have money today, and they hand it to those who can build tomorrow. They transform unused capital into immediate, life-changing opportunity. There's honestly a real philosophical beauty to this invisible engine. Banks don't just move money, they connect almost every single part of the economy. Think about it. Tonight, while most of the world is fast asleep, billions of dollars will silently continue moving through this network. Salaries are going to be deposited. Businesses will pay their suppliers. Hospitals will pay their staff so they can keep the lights on and save lives. Bridges will be financed. None of the people on either side of these transactions know each other, yet they are all intimately connected. Banking doesn't simply move money from point A to point B. Banking moves possibility.
At the very beginning of this explainer, we asked, where is your money? Well, we now know the answer was never a vault. Your money became part of something so much larger, a system built over thousands of years that helps strangers trust strangers. Every single bridge built and every business opened relies on people believing in a system they will never fully see. So moving forward, try reframing how you look at your banking app. Instead of just looking at it as this personal metric and asking, how much money do I have? Maybe we should all be asking, what is my money helping to build? Banks aren't just brick-and-mortar buildings. They are literally one of humanity's greatest inventions. An invisible engine powered by confidence, protected by rules, tested by fear, and sustained entirely by trust.
Every system tells a story, and this is the story of how our modern world operates day to day. We've explored how money circulates, how trust fuels the engine, and how banks actually empower society. But this entire circulatory system relies on something flowing through its veins, right? It relies on money existing in the first place, which leads us to a fascinating, entirely different mystery. If banks are just circulating the money, how is money created in the first place? That is a wild question, and we are absolutely going to explore that profound mystery in our next explainer.